Getting paid 52 times a year sounds like a dream, right? Weekly cash flows into your account can create financial breathing room. Imagine building a portfolio with powerful ETFs that pay weekly dividends. It's not gambling, it's smart investing. Today's spotlight is on 3 exciting weekly dividend ETFs: tech-driven growth, crypto-related exposure, and AI-towered innovation. First up is YAG, the Magnificent 7 Income Machine. This ETF generates income from industry giants like Apple and Microsoft. YAG uses options premiums to create weekly income, transforming stock price appreciation into cash flow. YAG uses a covered call strategy, renting out its ETF stocks for cash. The rental money, known as the premium, is distributed as a dividend. This approach has proven lucrative, especially in flat or slightly rising markets where big tech remains stable and valuable. YAG has surprised income-focused investors, outperforming peers like MAGY and YAX in total returns and asset management. Currently, YAG's yield can flirt with the 50% mark, making it appealing for those seeking substantial income from the tech sector. A basic $1,000 investment in YAG could earn around $9.50 to $10 monthly, or about $120 annually, scaling up significantly with larger investments. The biggest concern with high-yield ETFs is NAV erosion. Constant call selling can limit growth and grind down net asset value over time. It's like trading future upside for today's income, a trade-off every investor needs to understand. Compared to SCHD, YAG isn't a long-term compounding machine. It's a cash flow engine built for weekly income. When used properly, YAG delivers consistent, juicy, weekly dividends, even if capital appreciation isn't impressive. Next up is BLX, an ETF that blends the crypto and fintech space into a high-income, weekly paying package. BLX focuses on companies in the expansive crypto realm, like Robinhood, Hut8, and Nvidia. It's not just about yield. BLX combines growth with income, utilizing covered calls to leverage volatility for enhanced premiums. Since inception, BLX has exceeded expectations in terms of total return. Its comparative stability in dividends makes it a competitive choice among crypto ETFs. While YETH may shine during Ethereum rallies, BLX's diversified asset approach intelligently spreads risk, keeping it competitive in the market. BLX may not match YAG's headline yield, but it offers consistent weekly income. A $1,000 investment yields about $6 to $8 monthly. BLX isn't just about yield. It aims for capital appreciation too, providing balanced exposure to the crypto market without excessive risk. The volatility of the crypto sector brings risks. If underlying companies crash, BLX will take a hit. NAV erosion is also possible. That's why it's key to treat BLX as a satellite position in a diversified income strategy. BLX is bold by design, offering innovation without sacrificing a steady paycheck. BLX uniquely bridges income investing and cryptocurrency, blending them without excessive risk. Many crypto ETFs are either pure plays on price or thematic trackers with no yield. BLX says, let's chase opportunity, but get paid along the way. Blockchain isn't going away. BLX provides exposure to companies poised to thrive as adoption spreads. BLX offers a liquidity profile by holding publicly traded companies, eliminating crypto liquidity concerns. investors can buy and sell easily. During market volatility, premiums from call options rise, making BLX generate more income during uncertain times. BLX is ideal for dividend reinvestors, offering weekly payments for frequent compounding rather than quarterly waits. Pairing BLX with funds like NVI, JEPI, and QYLD creates a mosaic of yield for consistent cash flow. Different strategies, one goal. BLX fits into retirement accounts, being equity-based and IRA-friendly, appealing to conservative investors wanting blockchain exposure. It's important to stay grounded. No ETF is immune to market shocks, and BLX is no exception. Expect turbulence if the crypto space crashes or regulations turn hostile. Diversification and position sizing matter. BLX offers a compelling angle as part of a smart income mix, paying frequently and tapping into high-growth spaces. BLX operates through a simple, manageable structure, seeking innovation and stability in a market eager for both. Now rounding out the list is NVI, a REX shares ETF focused on one name, Nvidia, transforming the AI and semiconductor landscape. NVI uses aggressive covered call strategies and built-in leverage, outperforming competitors in price appreciation and dividend strength. NVI finds a smart balance between risk and reward while leveraging options premiums to enhance returns. That hybrid model, part leverage, part options, makes the weekly income pretty strong. Payments are consistent, and the total return metrics have been more than respectable. Even looking at just price return, NVI stays on top, proving it's not just yield padding, but real performance. At the $1,000 level, weekly payouts come in slightly under YAG, but are still meaningful, around $8 to $9 monthly. NAV erosion is a potential issue. If Nvidia skyrockets, the ETF doesn't fully capture that upside, giving away some gains for short-term income. Compared to traditional dividend payers like SCHD, NVI is more niche, aggressive, and tactical. SCHD focuses on long-term wealth. Nvidia has become a household name in AI, gaming, and autonomous driving. This momentum is a powerful narrative that attracts investors. Over the last few years, Nvidia has executed at an elite level with surging earnings and continuous innovation. NVI fits into the specialized ETF discussion by going deep on one dominant name, maximizing investment strategy and focus. Investing in NVI is not for the nervous. It aligns with those who understand their investment strategy amidst volatility. NVI allows investors to benefit from Nvidia's strength without worrying about entry points. Cash flow keeps coming even during dips. Weekly dividends can be reinvested back into NVI or used to scoop up shares of diversified ETFs like VTI or SCHD. This adds balance and helps build a sustainable income growth mix. Over time, the reinvestment adds up, and the weekly rhythm becomes a core part of the portfolio's heartbeat. If Nvidia faces a sharp downturn, NVI will feel it. The fund's income relies on the stock's stability. For safety, pair NVI with stable, lower volatility funds. NVI is about harnessing the energy of a single dominant tech stock for weekly income. It's aggressive and designed for income-focused investors. In the lane of AI investment, NVI delivers income potential for those willing to take calculated risks. Weekly dividend ETFs like YAG, BLX, and NVI serve a unique purpose. They aren't meant to replace core holdings like SCHD, VTI, or JEPI. Instead, they layer on extra income in a way that smooths out cash flow and makes financial planning easier. Using these ETFs smartly means not going all in. Put 10% to 20% of your income-focused portfolio into weekly payers. That's how the most effective income investors create stability and growth. Weekly income suits retirees and early fire followers. Knowing exactly how much is coming in each week can bring peace of mind and help plan expenses more smoothly. Adding weekly payers creates rhythm in cash flow management, almost like a second paycheck. Weekly income gives investors more freedom to reinvest dividends on a rolling basis, potentially buying dips or dollar-cost averaging. Dripping into SCHD, VTI, or even bonds can be automated with steady inflows, enhancing long-term growth while benefiting from short-term income. In volatile markets, weekly dividends provide a psychological buffer. Cash payments can feel like a small win despite market fluctuations. Emotionally, weekly income consistency reduces panic selling, helping long-term investors maintain their strategy. For early retirement or fixed income, weekly dividend ETFs add reliability and support freelance incomes with predictable checks. Weekly distributions assist in monitoring income flow for precise tax planning throughout the year, avoiding large hits during tax time. These funds aren't magic bullets. The yields can shift, and performance can trail during major rallies due to capped upside from call writing strategies. Some weeks, payouts may be smaller. Some months, the underlying NAV might drop more than expected. That's the price of weekly consistency. For many investors, stability and cash flow matter more than maxing out returns. A steady stream of smaller payments can feel empowering. Weekly dividend ETFs offer something rare: financial momentum. They keep things moving and create a consistent financial cadence. 3 powerful ETFs that pay weekly: YAD for Magnificent 7 income, BLX for crypto-related growth, and NVI for Nvidia's AI strength. This is next-level income investing. More frequent, more flexible, and tailored to today's needs. Weekly dividends are a game-changing strategy. In a world where inflation eats into every paycheck, having income roll in every week makes a huge difference. It helps bridge the gap between bills and savings goals. It helps smooth out market swings. This strategy isn't just for retirees or income chasers. It's for anyone who values consistency. Weekly income builds discipline, flexibility, and confidence. It's not just about how much a portfolio grows. These ETFs aren't a silver bullet, but used the right way, they create a rhythm that other income tools can't match. It's a smarter way to think about passive income, and a timely one too. As more investors start shifting from growth at any cost to income with purpose, these funds are only going to grow in popularity. This is the income generation game, reimagined for a faster world. Not old-school dividend hunting, not risky speculation. Just clean, reliable weekly paychecks from assets that work as hard as the investors who hold them. It's income with rhythm. It's cash flow with purpose. And it's happening every 7 days. Like content like this? Be sure to like this video, subscribe to the channel, and turn on notifications. Drop a comment below sharing which of these ETFs looks most interesting, or if there's another weekly payer flying under the radar. And if you're ready to build your own weekly income stream, check out our other videos popping up now. Thanks for watching, and here's to getting paid every single week.